We're talking with Scott Shepard, and we're talking about the American corporate system. It served us well for a quarter millennia, really, since the buttonwood tree that created Wall Street that we know today, to very recently, the owners of American Corporation were the shareholders, and they controlled it. They're still the owners, but they've lost control. How did this happen, Scott?
Well, part of it was accident, and part of it was design. What happened was, in previous decades and centuries, and this was Alex Hamilton's genius and his evil, the people who owned shares were largely wealthy New Yorkers or wealthy Northeasterners. And the mass of the country had nothing to do with Wall Street. That changed in the 20s. Everybody got in, but they got in so late that they were burned by the stock market. And unfortunately, Hoover governed like Roosevelt, but it got blamed on the Republicans. And so there we are. Now everybody owns stocks, and they wanted easy ways to get into the stock market. And that turned out to be ETFs and mutual funds. So you don't have to buy individual stocks. You just buy a whole panoply, and you've got risk amelioration. But if you own only fractional parts of a bunch of stocks, you can't vote your own proxies. And the people who issue those ETFs for a very long time just didn't influence companies with the power of those investments in any way. But after Zuccotti Park, after the deal with the devil liberals, the big three investment houses started using other people's capital to force corporations left. And that's the crisis in a nutshell.
Well, define for our viewers who don't understand, what is a proxy? What do you mean proxy? Because like I own shares in a bunch of corporations, and I want the company to understand what my shares stand for, what I want done with them, and so forth, and I vote those shares. What's a proxy vote?
Sure. Every year, a company is required to have an annual general meeting, which is a meeting of shareholders. And for that meeting, they send out a ballot of the things that shareholders are going to be able to vote on that year. And it includes nominations and renominations for directors of the company, and some random things. And then shareholder proposals that have been sent by organizations, including ours or larger shareholders, to try to influence the direction the company's moving in. And so in prior days, if you own 10 shares of AT&T, you could go vote those 10 shares of AT&T. But what's happened, if you own 10 shares of an ETF, those ballots go to whoever sponsors the ETF, BlackRock, State Street, Vanguard, and then they get to vote those shares. And that's the mechanism.
Yeah, so with that, I want my investments to vote to maximize the return to the shareholder, that's me. But there's been this whole new concept of stakeholder capitalism, where somehow companies are supposed to represent the interests of everybody, whether they own shares or not. And that to me sounds like socialism or on the march to Marxism.
Well, I mean, it's all a con, right? Because as you know, just by watching any election ever, all the people don't agree about anything. And so when they pretend that they're working for all stakeholders by doing some invariably lefty policy thing, what they're actually doing is using whatever stakeholders they picked as sock puppets to do their own personal policy preferences.
Yeah, and that's no question. And when they send out these proxies, you look at them, and I've got a chartered financial analyst designation. I've studied proxies for 40 years of an investing career, and yet they can be very complicated, they can be convoluted, there's double negatives in them sometimes, they're really not simple, plain language, easy to understand. I think the SEC's tried to address it, but there's still, the board tells me, vote for these candidates for the board. They basically suggest themselves to be voted for.
Yeah, well, I mean, that's exactly right. And some of it is convoluted, and the SEC has tried to fix it, but in the modern era, the Gensler SEC wants there to be as much convolution as possible using woke doublespeak so that investors think they're voting to increase the value of their shares and the efficiency of the company, but they're voting for equity-based discrimination, crippling decarbonization, and just the whole left-wing panoply.
Yeah, and that's for the, quote, stakeholders, which you claim are sock puppets. They don't technically have votes at the moment, just the shareholders do. But if you own an index fund or an exchange-traded fund or any kind of mutual fund, the manager may be voting their interests and not the interest of their actual owners.
That's exactly right.
All right, so the boards are recommending themselves, and there's all these issues that come up, and you fought a good fight on that, bringing up conservative issues to counterbalance the lefty issues. And the point is that we just want the companies within the framework of the laws of the United States, within the framework of good corporate practice and so forth, to maximize the return for the shareholder. I invest in a company so I can get the highest possible return from it, but that's not what everyone thinks, is it?
No. Well, here's what the left and the ESG movement does. It pretends that it's neutral and it's just doing good for everybody, but that's impossible. What it's actually doing is trying to force corporations to adopt the whole government initiatives of the Biden administration, for example. And so they're directly partisan. We, on the other hand, have fought for companies not to take right-wing positions, but just to go back to absolutely neutral, to do their fiduciary duty, to stay out of social and political controversies unless it directly affects their bottom line, so to keep taxes from going up or something, but to stay out of these things. And yet, of course, the left says that we're politicizing when we fight their movement to the left, and that they're neutral when they try to push in that direction. So, it's the same lies that we always get from the left, the same, and you have to do the Pravda read of anything they say, to read backward, to know that anything they're accusing our side of, they're up to their necks in.
Well, and they keep it confusing, and so people turn to proxy voting services to help them. Well, what is best for the company? How should I describe the proxy advisors?
Well, so there are two companies, ISS and Glass Lewis, who again pretend po-facedly to be entirely neutral, not to be partisan, but we did an analysis over the summer. They've voted over the past, let's say, decade, 60% of the time for left ESG proposals that move companies to the left, 0% of the time for ours or other right of center groups, S or E proposals, environmental or social, 60 to 0. So that's a pure partisan batting average.
But that gives political cover. If you're a manager, it's like, well, that was recommended by our proxy advisor, ISS, so it gives them political cover. What happened to the fiduciary standard where I'm here to serve the actual owners of the company?
Yeah, that's disappeared, and it's still in the law, and I think we're going to see a lot of enforcement of it once a win or two gets chalked up.
Yeah, we need to take another break. When we come back, let's talk about your new Proxy Navigator tool and how that can really change the game for American investors. We'll be right back.